The latest tariff and a trade news flow, the U.S. easing back on automotive tariffs. U.S. Commerce Secretary Howard Lutnick saying that the U.S. is working with domestic automakers to lessen the tariff impact and rewarding companies that move production into the U.S. It follows a letter last week sent by a coalition of auto companies warning President Trump that 25% tariffs would hurt sales and hike costs. Foreign car makers, including Hyundai Motor, Toyota, and Volkswagen, had co-signed that letter. South Korean auto shares firmly in the green on the news. Meantime, the U.S.-China trade standoff may continue, but U.S. Treasury Secretary Scott Bessent says there's a way out if China steps up to talk.
I think this makes my point that the Chinese, they are exempting all these goods, tells me that they want a de-escalation. And what we haven't done is escalate by embargoing those goods or putting a trade ban on those goods, which we could, if we needed to gain more leverage. We haven't done it. They've actually given us a list of what comes from the U.S. that is valuable to them. And, I can tell you, I do have an escalation ladder in my back pocket, and we're very anxious not to have to use it.
Chinese President Xi Jinping reportedly heads to Shanghai this week as Beijing builds up its domestic strengths. CNBC.com senior correspondent Evelyn Cheng has the details. Evelyn, what are the implications of his visit? I know the last time that the president was in Shanghai was November 2023.
Right, Emily. Well, we don't have official confirmation of whether Chinese President Xi Jinping is going to make this trip to Shanghai, but there are certainly multiple messages that such a trip could send. One, certainly that as China focuses on building up its own tech capabilities, during that November 2023 trip, Xi went to visit with a humanoid robot company, and that photo of him across from a humanoid robot got a lot of attention in China's robotics industry. Shanghai is also an important hub for international business, especially finance, and part of China's message as it faces the U.S. tensions is that China is a place for foreign companies to do business. They're trying to send this message of stability and opening up further as they emphasize how the U.S. has become much more protectionist. This all comes, though, as China is facing near-term pressure from the increased U.S. tariffs. I did talk to some factory consultants, and they're saying that there is a lot of uncertainty, and some of the factories are even pausing production and telling their workers to stay home for now as they figure out how to mitigate the impact of the tariffs and potentially come to some sort of agreement with their U.S. buyers. And so we've seen in the last couple of days the Chinese policymakers are really emphasizing the need to support employment. A couple months ago, the emphasis was much more on boosting consumption. So we'll have to see as they try to navigate the impact of the new U.S. tariffs, what that means for the domestic consumption and also for the jobs and the entire trajectory of the economy as they still try to achieve this 5% target for the year. Back to you.
Thank you very much, Evelyn Cheng, there live from Beijing as we are tracking the latest developments in the trade war with Scott Bessent saying that the ball is now in China's court and they should step up. We are going to be watching, of course, President Xi and his expected or supposed trip to Shanghai. We'll be watching out very closely for that. Speaking of trade, we did get some trade numbers out from Hong Kong just yesterday and a very robust set of figures for the first quarter as well as the month of March. Now, in the month, we saw exports surging 18.5% on year. That was following an increase of 15.4% in the previous month. In terms of imports, rising 16.6% in March on the back of an 11.8% increase in February. For the first quarter, shipments outbound rose 10.9%. Imports increasing by 9.8%. What's notable to take note of here is, of course, the exports to the various countries. We are looking at some declines there in the likes of India and Japan, but notable surges in Taiwan up 61%, Malaysia up 57%, and of course China's China, the mainland, up 25%. Also should mention the United States, up 11.4%. Let's talk more about the trade picture in Hong Kong. China's top trade and investment promotion agency releasing a survey yesterday that says companies are rerouting in the midst of the trade war. According to the China Council for the Promotion International Trade, nearly 50% of those surveyed said they're scaling back business activity with the U.S. and that 75% of those surveyed are looking to expand into emerging markets as manufacturers try to figure out how they plan for the long term. Now let's continue on this subject. Kennedy Wong is a member of Hong Kong's Legislative Council and honorary president of the Hong Kong Chinese Importers and Exporters Association. Kennedy, Mr. Wong, thank you very much for joining us here on CNBC.
Thank you, Emily. Good morning.
Good morning. I want to start with the trade picture here in Hong Kong. A very robust set of numbers, double-digit percentage gains for both exports and imports. How much of this was the front-loading, though, ahead of Trump's Liberation Day?
Well, first of all, Hong Kong has very little manufacturing itself. So basically, a lot of Hong Kong-owned factories are in the Greater Bay Area. And I think most manufacturers have anticipated, a certain sort of trade war coming up. And U.S. buyers in the first quarter placed order earlier. So, my family has manufacturing facility in the GBA also. And so far, actually, we are ahead of our budget. So far, for the manufacturers, it's fine. But I think the main hit now is gradually showing to the logistics provider and also the couriers. And then the couriers, of course, mostly they use the Hong Kong airport and also the Hong Kong port. So I think if we look at April, probably we see a lot more pressure. And, hopefully it will be resolved within the next couple of months. I think otherwise we'll see probably a drop in Hong Kong's export. So far, for our association, the Chinese Importers and Exporters Association, I've checked with a few members. And this month, in April, for those US-bound businesses, they reported back to me that on average there's a drop of 20 to 30%. That is actually almost 20 to 30% of the whole revenue. So that is the kind of percentage that we're seeing. So we probably will see a steeper decline because when all these measures are implemented by the U.S. authorities.
So it has to get worse before it gets better. But you mentioned earlier that a couple of months, and of course I perked up because are you expecting to see some sort of a resolution in the next couple of months?
Well, it's very uncertain, honestly, because as far as I know, the Chinese side has not really started formal negotiation with their U.S. counterparts. So this is really more political. I think from the business world, we need to probably reroute our supply chain. And already for a few years now, a lot of Chinese manufacturers and Hong Kong manufacturers, we have implemented the so-called China Plus One. So I would say most major manufacturers, they have other facilities, in particular in the ASEAN countries. So in the short run, probably 2-3 months, that won't really affect the production. But then in the longer run, because the mainland business, mainland manufacturing facility is still the main facility. So how do we deal with that?
How big of a market is the U.S.? We're looking at, in terms of export destinations, exports rose by 11% to stateside. Do you expect that to diminish over time?
Well, I guess so. I think that has been the trend since 2017, since the Trump's first term in office. And because, there's been a rerouting in the supply chain. So some products, or half-finished products, have been sent to elsewhere for the sort of final touch-up and then, probably final export to the U.S. So I know of Hong Kong manufacturers who have set up facilities in Mexico, in Malaysia, Indonesia, Thailand, Vietnam, and so on. So, but still, China is still probably, in terms of productivity and efficiency, the highest and the best for all these manufacturers. So they would like to keep the major part of their manufacturing operations in the mainland. And then, Hong Kong, because we are service industry by and large, And we provide financial services, insurance, logistics, and so on, to these manufacturers in the export. So, when, export numbers rise, Hong Kong's trade, in the services also rise. So we benefit. But when it declines, it'll hit Hong Kong directly also.
Yeah, Hong Kong is caught in a very difficult place because we no longer enjoy the trade status with the United States. So we've been lumped together in terms of the tariffs being charged on China, also applicable to Hong Kong. But Hong Kong, we heard from the financial secretary, maintaining the free trade port status, allowing free flow of capital, goods, in terms of talent and information. So how is Hong Kong going to be navigating this? We're going to be, dealing with increased tariffs, but we don't get to charge any tariffs.
Well, Hong Kong has traditionally been a free port. So actually, we only have, relatively low taxes on, tobacco and liquor. So I would say that, the government has listened to the trade industry, and, we want Hong Kong to remain as a free port. So basically, what we need to do is, for Hong Kong sort of manufacturers in the mainland, we have to open up new markets. So I only actually just came back from Indonesia 2 days ago. And actually the hotel I stayed in, I would say most people were from China or from Hong Kong. So, I see this sort of great interest in exploring the ASEAN, the Middle East, and even African markets. But of course, the US is one large market. It's very difficult to replace the US. You probably need 10, 20 countries all together. And so there's a lot of hard work to do. And that's why our Hong Kong government is also opening up more economic and trade offices. There'll be one opening this year in Malaysia, Kuala Lumpur, also another one in Saudi Arabia, Riyadh, and I heard that we'll even open up in Africa. So basically, the rest of the world altogether, can the rest of the world market kind of replace the US? Not in the short run, but perhaps in the long run.
We've heard from Financial Secretary Paul Chan wanting to explore new markets in the global south, so that would explain some of those countries that you've named. The trade association that you are the head of, honorary president, has made some suggestions to cope with the changes in international trade. What are some of those suggestions?
Yes, I think Hong Kong needs to progress quicker in our digital economy. So our Hong Kong government is building this large digital platform called One Trade Window. So basically, a lot of documentations, including even tariff payment, will be able to be conducted online. So, but a lot of smaller traders, they are still mainly offline, operating. So if we want Hong Kong to be competitive, we need to strengthen our digital economy, and we need to connect our digital economy to our supply chain. That includes the mainland China manufacturer, probably the importers from the ASEAN countries or the West. And so that's one thing that we need to do a lot more, digitizing our economy and trade. And then we have to move up the value chain in the supply chain. So, Hong Kong already, we have a big international airport. We can handle 10 million plus tons of air cargo. So we just need to stay ahead in a lot of these high value added logistics and courier and also financial services. So if we strengthen all these services that will be provided to the traders, we'll be able to survive. It's really a survival test now.
You've mentioned the airport, and Hong Kong is the world's busiest air cargo airport now for 14 years running. Hong Kong is number one, managing 4.9 million metric tons of freight just last year. With the trade war and the impact on Hong Kong, does the number one status stand at risk?
Well, I have not really compared our latest figures with our competitors, but Hong Kong airport is suffering. Under this tariff war, trade war, because a lot of cross-border e-commerce, the small packages, in particular, from the sort of GBA, Greater Bay Area supplies, they move through Hong Kong, and then we aggregate them, and then we fly them out. So already, those US-bound small packages have kind of stopped. So that has affected Hong Kong, that it will continue to affect Hong Kong. But then, what about to other countries like Europe and ASEAN? I heard that there's some pickup, but still that cannot replace the US market. So we have been hit in that sense.
Yeah, the de minimis exemption that, of course, gets removed on May the 2nd. We've been watching that in Shein and Temu raising prices. I have to ask you about CK Hutchison and the saga where the conglomerate looked to sell off its Panama ports alongside 43 other of its ports around the world. China has come out saying that this is a betrayal of China's interests, and the State Administration of Market Regulation just yesterday says it's paying close attention to the CK Hutchison planned port sale, and it should not be implemented without approval, otherwise legal liability will be incurred. So a warning from the SAMR. How do you see this being resolved? Is it just the fact that Cristobal and Balboa cannot be sold to BlackRock?
I think this is a fairly difficult deal. As far as I understand, I have no inside information. The China State, Anti-Monopoly, I would say, Commission has started its investigation. And then, this deal actually is a major transaction for CK Hutchison. So basically, they issue a lot of particulars to the shareholders. So shareholders' approval will be required. And before that, they have to get the consent of the Hong Kong Stock Exchange and the Hong Kong Securities and Futures Commission. So basically, a lot of information will have to be provided both to the regulators and then in the future to the shareholders. But because of this ongoing investigation, so it will at least slow down on this deal, unless, they do it in, some other manner. I've only read in the media that they probably break it up into smaller deals, but that has also been warned by the Beijing authority. You can't do that to avoid investigation.
Yeah, so that's, of course, something that we are going to be watching closely, especially with President Trump wanting to control the Panama Canal. Kennedy, just one last question before we let you go, and it is, of course, about Hong Kong and its potential airport economy. Now, we've been looking at ports, talking about shipping ports, bulk carriers, container ports. Hong Kong used to be the world's #1. This was many years ago. Between 1999 and 2004, Hong Kong was the busiest port in the world. How has that changed? Hong Kong now stands at #10. Do you think that we're going to be continuing to fall off the chart?
Well, I think it's really quite difficult for our port operators now because we have just about 1% of our GDP in manufacturing. So basically, and then we also have higher charges, compared to the Shenzhen ports and the ports in the surrounding region. So for the Hong Kong airports, the future is more rosy, because we have completed our third runway, and now we have still big sort of room to grow our sort of air freight, air cargo handling facility. As you mentioned, we are slightly below 5 million metric tons. We can grow to over 10 million metric tons. So I see a lot more challenge for ports, but I see a rosier picture for our airports.
Thank you very much for coming and talking about Hong Kong's trade picture. We've been speaking with Kennedy Wong, a president of the HKCIEA and Hong Kong legislator as well. We're just getting results from the Canadian elections, CTV and CBC calling a victory for the ruling Liberals Party, though it's unclear if they have enough seats to form a majority government as ballots are still being counted. We are tracking the Canadian dollar and we're looking at the CAD at 1.3809. As we head into a break, let's take a quick look at the Chinese yuan. The PBOC setting the yuan midpoint at 7.2029 per dollar this morning. That's the strongest level in about 3 weeks. Currently, we have the spot traded at 7.2736. The offshore in Hong Kong, 7.2723. China Connection going for a short break. We'll be right back.